Okay, everybody, this is Andy Pedraza with Special Effects Academy on the start of the week session for week of July 29th, 2018, end of month. We're going to go through our regular agenda, so bear with me 1 second while I get the show on the road. Okay, so we're going to look at what happened the prior week. Not going to be pretty. We're going to look at the currency strength meter. We're going to look at the fundamental announcements, our major pairs, our setups in progress, and some parting words. So with that said, let us dive in. So these were the results of the prior week as regards the long-term account. So we did open 4 new trades. One of them was quickly closed out because we just didn't like the look of it. And it was closed out basically flat. So at the same price point we entered that. 3 other trades were opened and they are still open at this point, and they were carrying profit as of Friday afternoon at close of market. Not sure what they're doing right now since the market has already opened. Let me take a quick peek just so I'm not lying to anybody. Okay, all 3 are still carrying profit on the long-term trades. And we do have an older trade that you can see up here, which was opened back in May with the euro pound. That one is carrying an even deeper profit at this point. It's been open long enough, so it is carrying more than 100 pips right now, some of which have been protected against a retracement by now via the stop loss. So we've got those 4 trades open in the long-term account. So long-term account is looking very healthy. We've had close to a 40% uptick on the closed trades since the beginning of our fiscal year in April. And as I said, this is carrying profit that is not counted in that percentage of anything or any of the actual numbers of pips, dollars, anything else. So that one is looking good. We're going to look at the short-term ledger. As I said, that's not a pretty picture. Basically, it was a total wipeout. We do have a good equity management in place, so we did stop trading when the week started turning ugly. We let the remaining trades carry on. As I tell people, when you're trading the markets, eventually you're going to have bad weeks, you're going to have bad months, sometimes you're going to have bad years. So that's not the issue. The issue is what you do in reaction to this that makes or separates rather a good trader from a poor trader. So we are taking corrective measures. Obviously, this tells us that the market is making a significant shift, which may be short-lived, long-lived, no way to tell right now. But obviously, the entry signals, the trading systems and whatnot that were being used on the short-term account need to be reassessed, which is what we've done. So we will be applying different systems for the coming week as well as the coming whatever month until, again, the market shifts and forces us to reassess yet again. So this will happen periodically. Some of you have not been with us long enough. Some of you have. So you've seen it before and you've seen our reaction to it if you've been with us for any significant time. Monthly results. I'm not going to present results on the long-term account. I do those quarterly. On the short term, we did close out the month. It was a negative month. We're still positive overall on the account for the year, but definitely this was a hard hit. So we're going to be going into recovery for August. You can see the week-by-week results and whatnot. So probably our worst week this fiscal year. Yes, indeed, that was it. But again, we will be taking the appropriate measures going forward to make sure that does not repeat, and indeed that we go on to recover for August as much as we can. So stay tuned for that. Obviously, we don't predict what's going to happen with the trading. We can only tell you what we plan on doing. The results will speak for themselves when we get into August and indeed when we close out August. Opportunities for improvement or comments in general. As I said, 4 trades opened on the long term, 1 closed flat, the other 3 carrying profit. That old euro pound trade is still running at profit with a stop loss protecting about half of it. Horrible week in the short term, but the rules were followed and only proper entries taken. So there is nothing indeed to improve. It is part of the regular operation. So it does require reevaluation for a market shift, which, as I mentioned, is what is being done. We'll be adjusting that approach on the short-term account effective immediately, and obviously until the next time we are forced to do another exercise of this nature. Trades that remained open over the weekend, none on the short term. We closed them all out, and we are all cash at this time. Relative strength meter for July 29th for today, July 29th, 2018. We're going to be looking at the week that just ended, week ending July 27th, and the immediately prior week. So we can see that the volatility net was very low. Most of the pairs finished very close to where they were at the beginning of the week. Unfortunately, they did move in wild leaps and bounds, which is not reflected in these numbers. We saw some of the pairs moving up in excess of 100 pips and then crashing down in excess of 200. So 100 band in either direction, and then finally ending the week pretty much flat where they were, which we will see in some of the charts that we're going to be looking at. In general, with the different currencies, we had the Aussie having a reasonably good week. It did well against everything except the yen and the Canadian dollar. The Canadian dollar had the best week it's had in quite a while. It did appreciate against pretty much everybody, but again, net about 1%, so nothing to write home to Canada about just yet. The Swiss had a poor showing, except against the euro. That was the only currency it appreciated against. The euro had the worst showing of all, ending at the bottom of every other trade, every other currency out there. Again, taking into account that the move was not as deep this week. There was a lot of sideways movement and zigs and zags, but overall, net, they finished plus or minus 1.2%. The pound was middle of the pack, gained ground against some, gave it up to others. JPY wasn't bad. It did well against everybody except the Canadian. The New Zealand dollar also pretty middle of the pack, won against some, lost against others. Dollar had a rough week. I did manage, however, to hold its ground against the Swiss and against the euro. And last but not least, we have silver, which was pretty good, except everybody except the Canadian dollar, and gold, which was pretty bad, except for the euro and the Swiss. So that is where we are with the relative strength. Again, take into account that the movement looks deceptively small, about 1%, but we did see some pretty wild swings intra-week. It simply ended the week at that level of volatility, but intraday it was a lot choppier than what you're seeing in this whole week chart. Moving on to the fundamental announcements for the week, and this one is going to be a very, very busy week. We've got, starting tomorrow night, we've got the interest rate decision and the monetary policy statement coming out of Japan that will be traded live. So that's at 10 p.m. 10 p.m. Eastern Daylight Time. And I will be active around, I'm going to say 9:30 to start looking at the different JPY pairs and see if we can pick anything up there. So this is going to be a heavily fundamental week, which is good because I'm still in the process of reassessing what systems we're going to be using in the short term in lieu of the ones that just didn't perform the last couple of weeks. So Bank of Japan is going to be a heavy fundamental trading day tomorrow. Then Tuesday morning, we have from the Eurozone, the CPI year over year. We're going to have the GDP as well, year over year and quarter over quarter. More CPIs on this, that, and the other from the Eurozone. That will all happen at 5 a.m. my time. So 5 in the morning. Eastern Daylight Time. I am very inclined not to trade that one simply because of the inconvenient time of day. It probably will make for some movement, so we're going to be very careful trading the euro. But 5 a.m. just interrupts my sleep pattern a little bit too much. So I'm going to be passing on that one most likely. I won't make the decision until sometime tomorrow. We're going to have the core personal consumption out of the U.S. at 8:30 a.m. Again, not one I usually trade, leaving that one alone. In the early evening, we do have the unemployment rate and the employment change for New Zealand. That will be a quarter before 7 p.m. Eastern Daylight Time. I may trade that one. Indeed, if I do, we'll probably hijack the 8 p.m. session and just do it earlier. We'll do it at 6:30 p.m. Eastern Daylight Time. Gives us 15 minutes of time to set up anything with the Kiwi, and then we'll go into our regular session to look at the different charts. We have, as I said, a busy week, so we've got two screens here. On Wednesday, August 1st, beginning of the month, we have the Fed's monetary policy statement, the Fed interest rate decision, and the bonds purchase program, treasury purchase program, and whatnot coming out of the Fed. Every interest rate decision is a high impact or the possibility of a very high impact move. And coming out of the Fed, it's about the highest impact you can possibly have. You heard Trump's statements a week ago that he did not agree with any further interest rate decisions. The Fed is now in a bind because if they are seen to slow down the increase in their interest rate, they would be seen as bowing to Trump's wishes, when he has nothing whatsoever to do with setting the interest rate decision. And of course, if they go against it, they will look as if they were simply going against the grain. So there is no win-win in this situation. It's a lose-lose no matter how you look at it. They've been placed in a very uncomfortable position, and no matter what they do, somebody will be complaining about it. We had been expecting more interest rate hikes out of the Fed for this year, but they never committed to when exactly they would happen. So they may indeed leave the interest rate unchanged, which feed into the idea that they're agreeing to President Trump's statements. Not a good thing for that impression to be given. Or they may indeed be forced to jump the gun and raise it just to say, you know what, we're independent and we do whatever we want. That's not a position I would want to be in. Either way, as I said, you lose. But we will be trading that one live, so we'll be opening up the trading room about a half an hour early for that decision, so at 1:30 p.m. Eastern Daylight Time. I'll decide by then whether I'm canceling the noon session and just do that at the same time. So this will be an oddly scheduled week for the sessions because we have to juggle all of these announcements. Then, of course, the very next day, 7 a.m. Eastern Daylight Time, we have the Bank of England is having their interest rate decision. And you can see the forecast there on the screen. It is expected that way they will increase the interest rate by 1/4 point. That already gives us a lot of intel because it tells us that if they fail to do that, the market will trash the pound. It will be seen as a weakness out of the Bank of England. If they do indeed raise it, it would probably make the pound stronger, though some of that has already been factored in. So the pound is already has already gained somewhat based on the expectation that they will be raising the interest rate by that 1/4 point. Of course, they're going to give us the monetary policy summary as well. So there will be some sort of press release, minutes being released, yada, yada, yada. So that will probably go on from 7 a.m. through 8 p.m. We're very close to it. And also of interest will be how the vote is split. So who voted to keep the rate unchanged, who votes to cut it, who votes for a hike. This is the vote from 2 months ago. 6 in favor of leaving it alone, and 3 in favor of raising it. Obviously, this needs to be a majority, so there will have to be at least 5 votes in favor of a rate hike for the rate to actually go up by the 1/4 of a point. So we'll be trading that one live no matter what. We have the Bank of Japan monetary policy meetings coming out Thursday evening as well. These will probably not result in any surprises. The big move, if any, will be happening tomorrow evening when the interest rate decision out of the Bank of Japan comes out. And last but not least, we have our usual big fundy of the month. We have the non-farm payrolls Friday, 8:30 a.m. And of course, you guessed it, we will be trading that one live as well, opening up the trading room around 8 a.m. Eastern Daylight Time to give us that half an hour window to set up our trades. Sorry. You can see the forecast. We're looking for 195,000 jobs added to the U.S. payrolls, down from 213,000 last month. If the number is very different from 195,000, either up or down, we will see a sharp correction on the dollar. The problem is we don't know which way it's going to go until it actually happens. So we'll trade that as we usually trade the fundamentals. So this week is giving us some brilliant opportunities to stage a recovery, simply trading fundamentals. So we may indeed be very light on the system trades, seeing as we're still revising and figuring out what we're going to do with them. But the week is going to be spectacular as regards opportunities regardless, because of all the fundamentals and very important fundamentals that are planned. That's it for the calendar. And now we move on to our currency pairs, starting with the euro dollar. So we see that the euro dollar, and these are all daily charts, the euro dollar had a very bouncy week. The last 5 candles will give you the week. So it went up, it went down, it went up, it went down, and pretty much ended on that flat line around the 116.50. Nothing much to say here. I'm not really going to make any significant comments today on any of these flat charts. Again, sideways movement, it's going to require a different approach, and we will be applying that in the trading week. But as I said before, it's going to be a heavy fundamental week, and that indeed may be the bulk of our trading. So flat charts will be mainly ignored until they break out of the sideways direction that they're currently locked into. Moving on to our pound dollar, we see more of the same. The pound did indeed try to stage a recovery, so we see that rising and then promptly collapsing back to around the midpoint. Most of that strengthening of the pound is indeed due to the expectation that the interest rate will be increased this week when they take that decision. But again, you can still see that it is heading into pound weakness in general, but flattening out. If you see, this is making a curve that is getting flatter, 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 and now we're getting into that sideways portion of the curve. So again, not looking for any significant trading opportunities in the short term. The long term is completely different. We're pretty confident with our long-term approach, and indeed we've seen that 40% increase year to date. So the long-term approach is not likely to be changing anytime soon. It's only the short term that we are reassessing. USDJPY, you can see as well that the USDJPY was on a nice little run towards the top, and then this last week hit a major setback and has pretty much collapsed. The last week was really sideways. These are the 5 candles. This long one was the week before. But this week it moved in both directions and generally just ended up as sideways as it began the week. USDCAD, this was a very nicely producing pair, and we did take some nice profit earlier on this as well as other Canadian crosses, but this last week again it suffered a well, it didn't suffer. This is actually the Canadian getting stronger. So the US had its upset, the Canadian got stronger. But what I mean is that it was moving very nicely up, and now it seems to be moving down at the same time as very sideways. So again, reassessing what this is going to mean for our short-term trading. For now, as regards long-term, we do have to cautiously admit that this uptrend has definitely been broken on the daily, and that we're now looking at the outer trend line as support, as well as this level of support at the 129.16. Or pretty close to 129 flat. So this is a key pair to look at. And indeed, I've highlighted the Canadian pairs as the probably one of the few currencies I'm going to be keeping a close eye out for as regards opportunities for the trading week. So it's probably going to be a little bit easier to trade than some of the others. USD Swiss is another one that is trapped in that sideways movement with a lot of bounciness in the prior week, actually in the prior weeks. It is at significant levels of support, as you can see from the chart, but more importantly, it's also very near its level of major resistance at the $1 to 1 Swiss franc. It doesn't look as if it's going to have the strength to go much higher, but it does have that support. At some point, I do expect it to do a full retrace back to its lower range around the 0.95, 0.94, even 0.92, all the way near the bottom. But we have to wait for it to actually give us a signal to enter that trade. But this is going to probably be a huge moneymaker once it starts moving. For now, patience is the key. On the Aussie dollar, other than pointing out that we still see that Aussie weakness against the dollar that's been playing out since January, it has entered a sideways trend for the past, I'm going to say, month. It's been sideways, but again, take a look at those very nice or very steep and deep bounces as it moves along the sideways. So again, for the short term, it's going to be a matter of being very careful. Long-term trading, however, is still looking good for most of these charts. On the Kiwi dollar, and again, this one tends to look very similar to the Aussie dollar. We see the Kiwi collapsing against the dollar, and we see that sideways action from the last month, with, again, very wild swings when it does start moving, but tends to end up along the same sideways line. Aussie Canadian, and again, the Canadian has been all over the place, and so has the Aussie. So this this pair is a very tough one to trade in both the long term and the short term. We have been actually getting quite a few pips out of it along the way, mainly relying on the Canadian to give us direction. So this indeed may be another one of those cat pairs that we focus on, because the signals on these pairs have not been as problematic as on the dollar and European pairs. Euro Swiss finally started showing some action as it moved into Swiss weakness against the euro, and in the last about week and a half, that movement also collapsed. It has broken through a upward trend line. So on the daily, it's looking like if it's going to drop back to the 114 area. This indeed might give us some opportunities, and I think we actually do have an open trade on this one, do we? I think this is one of our open trades on the long term. Yes, indeed. So we have a profitable trade on the Euro Swiss that was open. Not a whole lot of profit. It's carrying about 20 pips as we speak, but still moving in the right direction. We are trading it down. and we'll cover the other ones that we have open as well. So that's the plan for the Euro Swiss, is for it, now that it's broken that trend line, for it to continue dropping until, of course, something makes it reverse again. So we'll be keeping a close eye on these trades. Euro Pound is our other trade that's been open for quite a while, from May. We are, of course, long on this one, so it's been moving very nicely in our direction. Last week saw it do a deep retrace, never got close to our adjusted stop, so that trade is still there with us, and it now seems to, at the end of the week, have bottomed out and is trying to make its way back up. So long as it continues to make the higher lows and the higher highs, we will be keeping that trade open. And again, we have a good chunk of the profit already protected, so why not? EURJPY, and it is dropping, and at the same time, it's a very shallow drop. You definitely can't call it sideways. You have that channel heading downward across the screen, but you can see the choppiness. It does move easily 500 pips in a week if it wants to, and guessing the direction it's going to go is a bit problematic. You have some very good producing weeks like back here, and I know we took some of that profit off the table there, and then you have some very choppy sideways or bi-directional movements, which can go either way on you. So again, another one that we will be trying to trade very carefully, because it does give good opportunities, but also with a little bit of caution along the way. Euro Canadian, again, Canadian pair all over the place as the Canadian gets stronger and weaker in just taking turns at which direction it's going. Right now, it has been, however, reasonably flat for the last month or so, actually a bit more than a month. It does look like it's going to start continuing the downward trend. It did fail to pierce the levels of major resistance on its way up. I was hoping that it would go all the way up. It didn't. We took some profit on the long earlier, and, well, we took it, so we closed out the trade. It now does indeed look as if it's looking for the bottom again. So close eye on all the CAD pairs. Pound JPY, and this is another open trade we have on the long-term account, and it is the one carrying most of the profit. We're carrying about 40 pips, 30-something pips on this one as it heads down, and we do expect it, or the technicals being reliable as much as they are, we do expect it to either continue following the channel down or even try and make a trip across that channel towards the bottom. I forget if I have no, we don't have a take profit on that trade. So basically, we are giving it enough room to do whatever it will, so long as it heads towards the bottom. No change on that one for the long term. Aussie JPY, our fourth and final open trade on the long term, also carrying profit, carrying about 20 pips right now. So again, nothing to write home about, but the JPY does seem to be getting stronger, and we do have that fundamental this week out of the Bank of Japan. It did fail to pierce resistance, both on the trend lines, on the levels of support, as well as that shaded area, which is the Ichimoku cloud. That's the indicator I have on these daily charts just for my reference. So it has failed to significantly get above that point and is now once again heading down. We are trading it short, so the further down it heads, the better for us. But again, long-term trade, so just needs to be allowed to play out. And on that one, I do have a take profit. The take profit is somewhere close to the bottom at the 80-85 level. So somewhere around here where my mouse is jiggling, that is our profit target. So we're looking to take about 150 pips out of that one. And so far it is starting to move in our direction. Euro New Zealand, another very sideways pair with very, very deep and steep movements. So even though it's moving sideways, it is bouncing along a 500 to 600 pip channel as it does all of this. But note that it is not very consistent. It drops all the way across the channel, then doesn't make it to the top, starts waving around, makes it almost back to the bottom before shooting up to the top, drops, rises, drops. So you really are going to be hard pressed to find consistent entries on the short term with one of these pairs. On the long term, it's a little bit easier, so we may start trading this one there. On the short term, so long as it keeps wrapped up in that sideways action, it's going to be more of a headache than anything else. Pound Canadian, again, a Canadian pair. The Canadian weakness tried to make it go above the levels of resistance. That failed. Canadian strength came back into the market. It suffered a sideways period for a couple of weeks and has now been consistently dropping. It has pierced that level of support indicated by the rising trend line. More importantly, we had a wedge formation, a triangle, and it's broken out of the bottom of the triangle. So this indeed is probably going to be a great long-term trade, which we'll take a look at for however long it wants to move towards the bottom. So that will be assessed this week when we take a look at our long-term opportunities, or at any moment if it does breach that prior low that we see back here around the end of May. So if it does breach this prior low, I will likely simply pull the trigger and enter short and see how far it takes us down with it. I may indeed place a pending order and let the market do it for me automatically if and when. So that's going to be it for the charts. Does anybody have any questions so far or need me to go back on any of what we've covered before we wrap up here? Okay, then I will continue. So these are the setups that I see in progress for the week of the 29th. Again, I do plan on taking a little bit of a timeout to reassess which are the better systems to apply to the market we're in right now. But again, I don't usually do much Monday trading, so I still have a full day to figure that out. Plus, we do have our major fundamentals coming out this week. So regardless, it's not going to be a boring week. But looking at the different currencies and the ones I consider the 5 most important right now, obviously the USD pairs are going to be interesting regardless of what they do. But as I said, we're reassessing our short-term approach. Euro pairs will likely, sorry about the typo there, will likely be strong movers as well, but it's going to be very dicey figuring out which direction until we see a consistent move. Right now, they're being very sideways, and that does not give me a high level of trust. The pound pairs, the pound is not out of the forest just yet. Indeed, it has that fundamental coming out later in the week. But I would expect everything being equal, and unless they do something really unexpected for the interest rate hike, like raising it a full half a point or something like that, we're going to see a continued weakness out of the pound simply on the political jitters as well as the Brexit fears. So that's going to be weighing on the pound for quite a while. Indeed, it may end in a early election if there is a vote of no confidence in Theresa May's government or any sort of rebellion within the Tory ranks. So we'll keep a close eye on that and monitor the situation. And of course, we'll trade the pound as safely as we can if we see the good opportunities. The Swiss pairs, the Swiss franc is near its historical limit when it comes to weakness. So you can see that against the dollar. It's right below the parity, the $1 for 1 Swiss franc level. And that's usually where it runs out of steam and starts dropping again. However, it can stay up there moving sideways for quite a significant period of time. So the fact that it hits the top doesn't mean that it's ready to drop. We'll have to keep an eye on it. So I do expect that reversal into Swiss strength across the board. But we have to be very careful and make sure we don't jump the gun. Got to be at the right entry to take that. And as I kept mentioning while we were looking at the CAD charts, the CAD is probably going to be one of the more interesting currencies to trade as it continues pairing off both weaker and stronger currencies. And it will always be a good hedge for us if we need a hedge via the arbitrage. Obviously, that didn't work too well the week prior, but again, we're reassessing that entire approach. So we'll be doing something new this week, but mainly relying on the fundamentals, because no matter which way you dice it, even if we had a splendid week last week, we'd still be focusing on the fundamentals this week. The technicals go out the window when you have a high impact fundamental, and this week is like one after the other. So definitely going to be a fundamental week, and that gives us a little bit of time as well to reassess. I've already said it, we're going to do a reboot for August on the short term, so we're going to be taking a close look at the market dynamics and trying to figure out which way it's going to pop when it does pop. I've already said this, heavily fundamental week, stay tuned for that. I'll be sending out a full calendar, or at least I'll be giving people 24 hours advance notice on anything we plan on trading live. You already know tomorrow night I will be trading that JPY interest rate live. So this is your 24-hour notice of that one, and I'll officialize that in the email when I send out the start of the week summary. Last but not least, again, don't forget that losing is an inevitable part of trading. That's been my message from the beginning. I'm happy to have had a quite decent record for quite a while. We rarely have weeks like these, but we will have them. That's inevitable. So perfect trading just doesn't exist at any level. And the secret is realizing that and using it in our favor instead of getting all jittery and nervous, or worse, making it change our fundamental approaches to trading just because something happened. You shouldn't be changing things wildly because you won a lot or because you lost a lot. You should always have a plan that takes even that into account, and that's what we have. So we're adapting ourselves to the market, which is the way you're supposed to. And that is the end of my spiel for this beginning of the week, and I'll wrap this up by asking if anybody has any comments or questions. Okie dokie, then I will talk to you guys soon. Have a pleasant evening, a great week, happy trading, and I'll get a summary out very shortly as soon as I download the recording, because I'll include that there, and I will officialize the invite for tomorrow's fundamental trading. Thanks a lot, guys. See you next time.